Hello everyone, this is Mihir Korulwala from Mirae Asset Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuations. These are our investment ideas. Today we have an update on UltraTech Cement. The recent moderate price improvements after a sharp 8% decline over 9 months FY25 will benefit UltraTech given its strong market position. With cement demand projected to clock 7 to 8% CAGR from 424 metric ton in FY24 to 640 metric ton by FY30, UltraTech is well positioned to capitalize on this trend. The company's cement capacity is set to reach 182.8 metric ton by FY25, representing 28% of India's total capacity, with plans to expand to 209 metric ton by FY27 through both organic and inorganic growth. UltraTech's eyes cost savings of rupees 200 to 300 per ton over the next 3 fiscals by focusing on internal operating efficiencies. UltraTech has also announced its entry into cables and wires business with an investment of rupees 1800 crore. This move leverages synergies with its existing residential market, which accounts for 85% of wire demand and 65% of cement demand. However, the recent entry of Adani Group into cables and wires business may intensify competition in this sector. The pricing environment is also expected to improve. Hence, we maintain our buy rating on the stock with an unchanged price target of rupees 13,000. The stock is currently trading at EV to EBITDA of 21.3x its FY26 earnings and 17.1x its FY27 earnings respectively. Thank you for watching. Stay tuned for more updates and don't forget to follow us on our social media handles for the latest market insights.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.